Hello, everybody. Welcome to Weekly Market News. Today is Monday, 28th of June, and we are ready to end this month of June, which was fairly positive for stocks. And we'll see how this last week of June will play out. But more or less, we can see S&P 500 managed to reach the new record highs, not just once, but twice last week. And even the Friday session was fairly positive for stocks, even though we had some inflation numbers that looked on the first side somewhat very bad. But let's look at the sentiment. Overall, it's looking very good. The markets were able to shake off the nervosity and the doubts over the rising inflation numbers, which is probably the highest on the record. On PCE, the PCE numbers which were released last week on Friday showed us that the inflation is picking up. Obviously, something that we know, but more or less markets are working with the fact that the inflation pressures are only temporary and will not last very long, and also the monetary stimulus response should not change regarding on these type of things. Let's look at the inflation numbers. Core PCI, the one of the closely watched metric from FOMC, was able to rise to 3.4%. PCE index 3.9%. Overall, extremely high numbers, but we will see how the future, the next probably 2-3 months, upcoming months will look like, and if the inflation will not be able to stabilize or even to decrease a little bit, that will be a problem for Fed. But as of right now, we can see that the markets are more or less working with the facts that really it's a really low-based scenario with lower base effect, which the inflation numbers are compared with from last year. But more or less, we do not really see something crazy going on over there. The markets, the technological stocks, which might be hurt the most if the rates will go up, are somewhat close to the record highs. Last week, even we had 1, 2, 3 sessions that were able to close above the previous record high. So the sentiment overall is extremely positive. I can really tell. Let's look at the yields from U.S. Treasuries, which are also closely watched by investors, as the yield, if it goes up extremely fast, then it might be a problem for growth and technological stocks. But as right now, you can see that the yield from 10-year treasuries are more or less stabilized. I'm waiting for a chart to load. You can see from the end of maybe the beginning of March, we are all somewhat going in the side in a side term, a side trend. Not really going anywhere up or down. If the yield is going down, means that investors are dumping bonds and they are going into stocks. So that is also a very positive thing for overall sentiment at the risk assets. So, like I said before, very positive sentiment, more or less, stays with the market. I do not really see in the near term anything that might rattle the markets even a little bit. We have job data that are scheduled to be released on Friday this week, as every Friday, every first Friday of new month. But more or less, the numbers can only surprise us in the good way. So I do not really see any downturn risks and potential catalysts for any downside. You can see DAX is more or less hovering near the record high, so also somewhat of a positive sentiment here at the European stocks. But yeah, the sessions are obviously more and more volatile, as DAX was not able to kind of build up to those gains that was able to build here from the beginning of this year, and it's more or less hovering and going sideways for most of the last 3 months, with some momentum that is more or less keeps on being rising momentum. And here on the markets, every dip here is taking advantage here, and the market is going back up. So that's about the stocks last week. Even we had some reports here, some earnings released last week from the company called Nike. Everybody knows that company, and the earnings were very good. So that also helped to lift up the sentiment, the overall sentiment from at the markets. Let's look at the Forex, which was also quite interesting as the last week's inflation data. 2 weeks ago, the inflation data looked very promising in terms of US dollar. Also, somewhat of the FOMC now a meeting and the outcome of the meeting, which was the statement also said that the rates might go up 1 year earlier, which obviously is good for US dollar. US dollar was able to strengthen here, and after this technical correction at the beginning of last week, you can see the market going sideways for most of the time. So that also says that the US dollar is holding most of the gains. Not only on the Forex, on the Euro USD, where this might be the greatest metric for US dollar, apart from US dollar index, but also gold here is holding those, I'm not going to say gains, but holding those losses. And if you look at it, gains on US dollar. So dollar remains strong here, and might also be building up to those gains. You can see the resistance that was built up here last week can be broken, and then the liquidity can drag this all the way down to 1750, where we have some also interesting, we have a daily gap and some interesting technical support area. So that's about the markets from the dollar perspective. Also GBP, USD. There was a meeting from of Bank of England last week, and that didn't tell us a lot of new things. Obviously, the rates remain unchanged, as well as the monetary stimulus in terms of quantitative easing and other things. But you can see the GBP last 2 weeks, extremely volatile sessions, somewhat something that we might have been expecting, because this sideways price action was somewhat looking for it. So everything was leading up to the fact that the market might go up, might go down here, and you can see the volatility here remains. I would be more or less positive in the near term on GBP. So I would say month of July we probably will go back above 140 GBP for US dollars. Let's look at the crude oil and other commodities, especially crude oil, which remains to be extremely positive with the reopening all over the world. The cases are going down, and obviously the consumption of oil and oil derivatives like gasoline is surging with the coming months of summer. Which are very good for the consumption of oil and gasoline or diesel. So those are the things that are somewhat helping the markets. Obviously, the other economies and then countries are reopening, which helps the overall air travel. So people are traveling back again, and they're going back from state to state, from country to country. The restrictions are getting less and less strict, which is fairly positive for the market here. And you can see the crude oil was able to take advantage of it, and was able to rise above $74. We will see how the effect of some higher production from U.S. producers, also from OPEC, which is ready to ramp up the production in the coming months. How this thing will play out here on the markets is obviously the prices are high, and the producers need to fix those losses from last year and make some money here and get in the profit. So it looks like it's only a matter of time when some of the producers like Russia will ramp up the production more than previously anticipated, and the price may go a little lower. Also, just a technical trend here, uptrend here that we see here is more or less kind of losing its dynamic, I would say. And the $75 per barrel for WTI oil is looking a bit too much sometimes. So some technical correction can occur anytime, and if you are in a long on crude oil, and because of the fact that there are negative swaps, I would probably thinking about closing at least some of the position. Let's look at the crypto here. Last week was not that interesting, although we were able to see some break of some very interesting level. And let's look at the daily time frame, which can tell us a little bit more. And we were able to break below $30,000 a barrel. I mean $30,000 for Bitcoin. And let's look at this right here. Was 28.68. Even this $30,000 level can be seen that it's the level where some of the big orders are ready to fill in. A lot of players here around this price. So I'm not very a huge optimist here for the price of Bitcoin. Obviously, it's still kind of looking for a value. And to find the value is very, very hard here these days. So I believe that there might be a shift from Bitcoin to some other cryptocurrencies that kind of make sense a little bit more. And the blockchain is obviously getting in the daily life, not just like a Bitcoin itself is still the number one metric for cryptocurrencies. But and if the sentiment will be positive here, it will be positive anywhere else. But obviously, we are going to have to go through some of the downside, some of the pressure, some of the nervosity here, and then we can bounce from there. So whenever you think it's already too bad, it might get worse, and when you think it's over, then it's the time to buy again and get in the market. And I don't really personally see that the time here is now to get back in the market here. I would say that there might be some downside pressure as well, and we can go below $30,000 a barrel. I mean $30,000 for Bitcoin, and then we can see some. We need obviously some hype. We need some speculative investors to jump in the market with institutional investors as well. We will see. Maybe the report from Tesla will tell us a little bit more. Maybe they have sold more of the Bitcoin in the last quarter, and yeah, that will tell us a little bit more about the current flow of the market. Let's look at the other macroeconomic news that we have upcoming this week. Like I said before, on Friday there are NFP data from USA. On Tuesday we have consumer confidence in US. On Wednesday we have some PMI data from China, GDP data from UK, from Germany. Then we have ADP, unemployment, GDP data, pending house. That's a lot of secondary data, not really things that should really make a huge impact on the markets. Even the speeches from Christine Lagarde, from Bailey, from Bank of England, those are things that very rarely have any effect on the markets. And so yeah, that should be a very calm week. We will see how this thing will play out, obviously. But yeah, the Friday session will be something that the investors will be closely watching, and probably something that can also impact the volatility in the days before. So the markets can very well go sideways for most of the time. So that's it for today's video. Thank you guys for watching. Hope you guys enjoyed, and if you have any questions, leave it down in the comment section, and I'll see you next week.